Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for July the 12th to the 16th, 2021. Hope you had a good trading week. This week was actually a short trading week because, of course, the holidays that we had on Monday for U.S. Independence Day. But nevertheless, hope you had a good trading week. I'm actually recording this video one day earlier than usual. Usually I record these videos on Saturday, but I'm actually going on vacation tomorrow. So going up north, actually going to go a little past Quebec City to a little place called Baie Saint Paul. I've never been there before, but going to go vacation up there and check it out. I'm going to be spending about a week at a chalet, so hope to enjoy my time off there. I'll still be looking at the markets, but won't be trading actively, but we'll be keeping an eye on things because this coming week, it should be an interesting week. Now, before I get into the charts, just one small thing. Because I'm recording the video one day earlier, some of the data may not be closed out yet. It is Friday afternoon. The markets are not quite closed, so this is not end of day data. So we'll see where things settle out. But nevertheless, I want to make sure I get this video recorded, locked in, and out the door before I leave tomorrow on holidays for a week. So this coming week, what I'd be focused on would be the following. So the big thing is this. So we got the big CPI print on Tuesday. That's really the big number, and I talked about it in last week's video, and this is the number that I think everyone is really waiting for. This week's action, again, we had some volatility in spots, but I think it's really basing around and really setting up around this coming Tuesday's number. That CPI number will be very important because, as I mentioned last week, this will be one more data point to either confirm that inflation is transitory or that we actually have increased, maybe continued inflation. So the following day on Wednesday, we have Jerome Powell speaking, so that could give us more color around that CPI number. And then we have earnings, of course, beginning on Tuesday as well. So bank earnings report on Tuesday. So check out your earnings calendar. I think JP Morgan, Goldman Sachs report on Tuesday. Then Wednesday, we got the whole list of actors like Citigroup, Bank of America, Wells Fargo, etc., etc. And then COA reports on Thursday. So earnings season kicks off next week. So we have plenty of things to watch next week. And even though I'll be off next week, I'll be definitely keeping an eye on some of the headlines, because I think this headline, as I said already, will be an important one, a lot more important than the Fed minutes that came out this past week. What Fed minutes? That's right. No one remembers the Fed minutes this past week, as I said last week. It's already been baked into the cake. No one's watching those Fed minutes. It's already it's a lifetime ago that the FOMC happened, and the minutes are already digested and baked into the puzzle. So all eyes on CPI this coming Tuesday. Cannot stress that enough. That's going to be the big data point. So let's go into the charts now and talk about the week that was. And I think I gave a pretty good roadmap last week about what to watch for, and it pretty much played out to the T. And if you've been watching these videos, then you understand how to interpret the price action, and you understand how to read the charts to position yourself for for the right side of that trend. Because we've, as I've been talking about these videos, the most important part is to stay on the right side of the trend, and that you're trading in the direction of the larger picture. So starting off with the VIX here, what do we have? Momo down. So the Momo down continues, and until you break above the prior month's high, this Momo down move continues. That means VIX is still going into lower lows, right? So even though we had a bit of a blip on Tuesday in terms of a bit of a shakeout, there's no reason to believe that VIX won't ultimately head lower. As we saw here, VIX did break above the prior week's high, but I've been saying for a while, the VIX is going to continue to decay here, the VXX that is, until a big narrative change happens. And I don't think you see anything in the picture right now that's going to change this narrative picture. Now, the CPI, I think, could be something different, right? So if we see something, a very, very wild session on Tuesday or Wednesday because of that CPI number and its reaction to it, again, the reaction sometimes is more important than the actual report itself or the actual trading the day of, that could change the picture. But in order for me to really start paying attention to VIX, it's got to crack above the prior month's high. That's this orange line there. So we need to break above there. So that's the 36.18 area. And to really get my attention, you got to break above these blue bands. So we're talking the 37 area, and up here is the 39 area. You break above there, then yes, I'm definitely paying attention to VIX, and I'm thinking the market's going to break down significantly if that happens. But until that happens, yeah, the VIX just does what it usually does, and that is to get people very excited and then fade them. That's basically the way the VIX works. So for now, I had a week up. It's a green week, and basically it's because of this follow through. Remember what I said last week? So here, last week, so this is this week's trading: Friday, Thursday, Wednesday, Tuesday. On Friday, last Friday, I said already, like on the weekend video, I said, look, you got a gap reversal happening here on Friday. Expect continuation, right? So that's what you got. You had 1, 2, 3 days of a continuation there to the upside on VIX, and then look, on Friday they just puke it, right? So this is pretty much gives it all up again, and it's kind of like I've always said the VIX. It's like there's no continuation with the VIX. It hits the upper band of that average weekly range, and it fades back in again. There's no range expansion on the VIX here. Just gets people excited and then basically fades them and falls back into the range again. So ultimately, we end with the it is full time from alignment, so it is a green week, it is a green month, it is a green quarter, but I expect these kinds of moves to happen with the VIX all the time because you have a very, very strong downtrend, and it's momo down the monthly chart until you break above the prior month's high. Again, the trend is still momo down. So let's take a look at that VIX futures contract. Now this one here is end of day data, so it hasn't closed out yet. But for now, inside month, right? So this thing is not exciting at all. It's still inside month. On the weekly chart, what happened? You did break above the prior week's high. You faded back in again, but you don't have, because it's Friday's data hasn't come in yet. You only see Thursday's scary bar. Now that bar looks, wow, does it look scary? Potentially, but we know what happened with the VXX. The VXX was a real clue here, and even look at this. If you look at the SPY, it's very clear what happened here. It actually it ended red on the day. The SPY, actually all the indices, I believe, did gap reversals, and I'll talk about that next here. But they all did gap reversals, and that sets up VIX to do the fade, which it did today, right back through the range again. Okay, so there's your VIX. I expect things again to going back into the coming week. So this would be the what I see possibly happening this coming week. So when these big numbers come out, the CPI print is coming Tuesday. Basically, how the market reacts is you want to try to catch as many people offsides as possible. So it's really that kind of game theory where you're trying to go for the least. You're trying to trade in the direction. Well, here's this. You don't want to be too contrarian. We just try to counter trade people, because you're hoping that you're going to get people off sides. Rather, what you're hoping is that you're hoping that people lean in one way very aggressively, and that the counter trade appears so that you can take that counter trade, right? So you don't counter trade just because you're trying to catch a reversal and be a contrarian. Rather, you're trying to get a feel for the direction that people are leaning, because then it sets up the next day for a possible counter trend trade, and those often become the most profitable because, as I mentioned before, when everyone's leaning one direction, then the big money is on that other side, because everyone has to exit at the same time when they're all wrong. So that's what I kind of expect to happen this coming week. What that means is, in layman's term, is I expect them to fade the news. So whichever way the news comes out, or maybe whatever way the direction the market's going into the event, expect a fade of that, or vice versa. So whatever is going to happen, we know it's going to be a fade of the consensus, because I think it's too easy when everyone's on one side of that boat or one side of that ship. It's going to likely flip the other way. So that's what's going to be important going into the Tuesday's number, is to see the consensus, what's going into the number, and then look to see if that reverses course. Okay, so a little bit elongated in terms of an explanation, but that would be the mindset I'd have going into that number, and I'd be looking for opportunities to look for reversals. So looking for the market to get stretched and then reverse, because knowing that everyone's probably leaning on one side of that trade. So on to SPY now. And what do we have here? SPY on a Friday afternoon basically hits all-time highs. So basically all the indices pretty much, SPY and Qs back to all-time highs. Russell Dow, a little bit of work to do, but catching up. So SPY now, count them, 9 consecutive months of higher highs. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, so that's 9 months of higher highs. It was really funny this week when we had a bit of a reversal happen on the daily chart, and seeing the headlines out there, on Bloomberg and other media companies. the way that people were talking about that small correction that happened on Tuesday, it looked like the world was ending. But it was at the end of the week, it's that move has dissipated. It's gone, right? It's been erased. So now we're left with the week as basically a big momentum hammer. So the buyers brought it right back again, and we never even took out the prior week's lows. So all this stuff about sell-offs and reversals, that is very over-exaggerated, because the reality is that what happened there, we didn't even take out the prior week's lows, and we're still momo up on the week on the SPY, right? So momo up 3 consecutive weeks of higher highs and higher lows. Until you break below that low, this week's coming low, so the coming week, if you break below this week's lows, that would be something to watch out for. That's what you have to really watch out for. Until even now, I'm not even giving a yellow flag yet. This is certainly a momo up, but I think it's, you have to break below there to begin to watch out for a bigger reversal. So this coming week, actually I will give a yellow flag. This coming week, if you break below that low there, then you have to watch out, because then you'll be below the monthly and quarterly open, and you will have given a weekly reversal. But even then, you still got to come all the way down here to take out that low there to create a monthly reversal. So unlikely that's going to happen. So I'm just giving a bit of caution, but not a big cautionary signal at this point, because even if you do crack last week's lows, what's the chance of taking out the prior month's lows? That'll be an outside bar, right? So if it comes all the way through here, that'll be an outside bar, and I think you're going to see that a mile away coming. So again, just think about those scenarios there. Now on the daily chart, this is what it looks like. So here, this is on Tuesday. What we have happening is we're going into Bollinger Bands, as I mentioned last week, right? So I was like, okay, Bollinger Band walk, how far does it go? It went up here, went up, and then here's the day where it kind of puked a bit. So this is your Tuesday, Wednesday, Thursday, falls back in. But look, it does a gap reversal. So gaps down, otherwise known as a red dog reversal or gap reversal. Gaps down, it comes right back up again, and then reclaims the prior day's low. Okay, so what's significant about that, as I mentioned before, why that is such an important support liquidity dynamic to watch, is that anytime you have a gap down like that, anyone who got short up here, those bears, they got exactly what they wanted, right? So if you're shorting up here and the day gaps down, that's fantastic, right? You're sitting on some nice gains. Now all of a sudden, if the buyers step up and you can't break below, and it basically comes back up again, you've lost the control of that particular market, right? So the sellers have lost their control of that market. The buyers have stepped in, and you see what happened on Friday. They squeeze the sellers. So anyone who did not cover on Thursday, look, it opens higher, and now you get squeezed, right? And they take out the prior high, and you're back to all-time highs. So very, very nice price action there for the buyers, and this is really, really nice because look. It gaps down. Where's it gap down to? Right there. That blue line, your monthly, quarterly open. That's why you watch the levels. It's so significant, right? It opens right there. We have a slight lower low. They buy it right back again within moments, and then they squeeze them the rest of the day and Friday as well. So imagine you're short from up here. It gaps down. You think you're doing great, and then you watch your gains just basically disappear on you on Thursday. Now you're wondering, should I close it out or not? Right? I had a lot of money down here, but now it's, I just lost half my profit. Maybe I'll hold on for another day. Is that a good idea? I don't know. Friday, nope, gaps up against you, and now you're watching it. All your gains evaporate into the end of Friday, right? And so now you're sitting here thinking, maybe I'll just put my stop above here, just in case, they try to gun for my stop. And sure enough, they take them out. That's exactly the way price action works, because what do you see there? That's actually a broad information. So I don't know how many times we need to draw this point out, but you can clearly see it once you train your eyes to see it. But the market always works in that fashion, right? So it always works in that fashion there, where you see a higher high, that's higher than that high, a low that's lower than the prior pivot low, and then this now creates a higher high and takes out all of the prior sellers. That's just the way the market moves, right? So really, really nice broad information, price action there for SPY. So this coming week, again, just keep watching those levels. How far can you go? It's a 2-day outside bar now. So here you got to watch out. You go momo up on Monday or Tuesday, and then maybe going into Tuesday's number, you go momo up here, and all of a sudden at the number, if people react negatively to the number, you do a momo up reversal short and it comes back to the range again. That's what I'd be watching for as a possibility in terms of the price action. Let's go to Qs now, because Qs is a very, very obvious short, and that was a really easy one to spot this coming week. So here, look, two up months in a row now, back to all-time highs for the Qs. Now on the weekly chart, 1, 2, 3, 4, 5, 6, 7 weeks of higher highs on the Qs. Wraps up the week at all-time highs. And on the daily, this is what it looks like. All right, so here's Tuesday's open. Tuesday here actually was a small gap reversal. So technically, you gapped up here, and at one point during the day, you'd come back all the way through the range again, and it looked like we were going to come out the other side. Okay, so it looked like we were going to come out the other side, and I'm sure people got short here, because I was tempted to get short. But as they closed up in the range again, they closed the day without taking out the high. But as I mentioned in my Slack channel, I said I've seen this game before. What you tend to do is that you're gonna basically take it one bar higher, squeeze out the shorts who got in early, and then do the fade. That's what happened on Wednesday. So here on Wednesday, they gapped it up, they gunned it higher, and then the sellers came in back in the range and creates another gap reversal. This gap reversal works. Gap opens way down here, and then just like the SPY, they bought it back, causing the shorts to have to cover now. So this is a very, very nice scenario if you understand what's at play there. Another way to visualize it, if you're looking at the futures, it's even easier to spot what happened there. There was actually going momo up. So it's momo up on the futures contract. So we can go NQ or MNQ, doesn't really matter which one we choose here. But it's momo up, right? You can see it tags the upper average weekly range and falls back in the range again. And then the following day, it opens lower, trades a bit lower, and look at that tag. Tags the blue line. What's that blue line? Yes, the average, that's the quarterly and monthly open, right to the T, pops back up again, and they repair that chart with the big hammer. So very nice close for the Qs. You have a little more work to do, Qs, to take out the all-time highs. But at this point, it opened up here, so it didn't quite close the gap yet. So actually, no, it did close the gap. Yeah, right there, closed right there on Wednesday. So yeah, the gap got closed. So yeah, maybe on this coming week we see it head higher, all-time highs, and then we see how it responds to the CPI number. So this is going into highs now. So this is again a yellow flag, because now we are going into Bollinger Band highs. You do need to watch out when you go into Bollinger Band highs how that breaks. So if you go higher, right, and you fall back on the range again, that's what you have to watch out for, because everything that's significant happens at the margin. So I'll say it again, everything that's significant happens at the margin. So in context of price action, what's that mean? Well, what's happening at the margin here is that when you're playing at the edges of price, this is where people are getting either into trades, or they're getting stopped out of trades, or taking profits. So in this case here, we had a gap reversal that did not work on Tuesday, and then you had a gap reversal that did work. That means it's coming back into price again, taking out the prior bar's high, and then we come back through the range. So the price action here at the margin was what's causing the selling on Wednesday. Now that selling definitely got repaired, because if you look at the Dow, we had the exact same price action. So the Dow now, what do you got? Very close to all-time highs. I think we tagged all-time highs, did we not? Not quite, but very, very close. Sorry, we're at multi-month highs, so we did break above the prior month's high. So that's now, we had a big momentum hammer. We broke above there. Just need to go after May's highs there. So strong on the Dow. Weekly chart, outside bar. All right, so breaks below the prior week's low, but they bought it back right away, and now you're trading with full time frame alignment, outside bar. That means now, this coming week, we want to see how does that outside bar break. Do we get some sort of momentum condition to the upside or to the downside? On the Dow, just like we saw on the on the SPY and the Qs, we got that gap reversal, that red dog reversal right there on a Wednesday. Gaps down, all right, so it goes inside bar on Wednesday, gaps down on Thursday, excuse me. Thursday gap down, and then they repair it right away. They bounce it right back. Look, there's that average weekly range, right back there, pops back on the range, and up here we had a nice big 1.26% day to close out Friday. Multi-week highs. Okay, Russell, the weakest of the bunch right now. Okay, so Russell did repair itself. So here we do have a reversal on the monthly chart though. So this is a monthly reversal. However, it came right back on the range again. So at the margin, this is not what you want to see as a seller. If you break below the prior month's low, you want to see it stay below the prior month's low. Because if you don't, you go back in the range again. That means these sellers who got short here at the bottom at this range, they got stopped out because, or they're sitting on a red trade now. So at the margin, they are underwater, right? So that trade, because if you got short below last month's range, yeah, you're underwater on that trade right now, and you're sitting on a red trade. So on the weekly chart, inside bar down. We were watching that inside bar last week, right? We were seeing how is it gonna get repaired, how is it going to break, and it breaks to the downside. But now you create a big hammer. So now for this week, I'd be watching, do you go inside bar down and back up again, creating the inside bar reversal, and that will be on full time from alignment if you can break above that blue line there. Okay, so that's what I'll be watching for this coming week. Can you break above this past week's high, or do you break back below last month's lows? Now here, going to the daily chart, we had a multi-day momo down move. And this is where it gets stretched. Momo, this is Friday, right? We're watching the Friday, last Friday's data. Momo, down, down, and now you're deep in the Bollinger Band. So now you're going Bollinger Band walk, and they just run out of steam. So immediately, they gap down on Thursday. They immediately repair the chart when it comes back on that range again, and they pop out the other side. So that's, this is a classic breakdown, momo down into the Bollinger Bands, and then you want to be along on that to break up to the upside. So yeah, at this point here, Russell possibly trying to play some catch up, definitely trailing behind SPY and Qs and the Dow in terms of getting back to those all-time highs. Okay, so there's your Russell chart. Now the one index, let's go on a TSX now, that I've been throwing out a yellow flag for some time now, was a TSX, and it was looking a little shaky earlier in the week, but they did repair that chart just like they did a bunch of the other charts. So we're going to multi-month highs now, right? So this is another chart that's had, I think, 9 consecutive higher highs. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months of higher highs on the TSX. We break above the prior bar's high, but we fall back on the range again. That's a little bit negative. You want to see how that condition plays out. For now, you got the inside bar and up the prior week, and this week it broke higher, right? So you want to see it stay above the prior bar's high, but it fell back on the range again. So this is what we were warning about the TSX, is that possibility. Now this, would be the worst case scenarios in the monthly chart. Somehow you break below last month's lows. Now I think it's going to be tough to do, because that would just be turned to an outside bar. But that's what you're waiting for, to see if that happens or not. So on the daily chart, look at the weak market structure, right? So we've been calling this out for a while. It's like if you get this type of action going into Bollinger Bands, so this is your Friday. So here's your Monday, Tuesday, Wednesday, Thursday, Friday. So last Friday here, inside bar, momo, up, runs out of juice, right? Tags the upper Bollinger Band, tags the average weekly range high, and then does a reversal. So this is actually just a reversal. Breaks higher, fails to buy any, to lure any more buyers, falls back in the range. That's type of reversal, and then comes right back to the range again, creating this outside weak. So that move there on Thursday basically wiped out the gains for the past 2 weeks for the TSX. So TSX is not on the average weekly range high. It's not on the Bollinger Band highs. So I think we could still grind higher. But it's these kinds of moves when you're getting this weak market structure that allows for these quick pullbacks to happen to stop people out very, very, very quickly. So here it tags the lower Bollinger Band, and then you're at the average weekly low here for the range, and then it pops back up on Friday here. Now I had a good 1% day. So yeah, we're right back on the range again. Overall in the week, only up 0.16%. So they repair the chart. Still a yellow flag on this one, because ultimately, if we can break below last month's lows, so June's lows, that would be definitely consequential for the TSX. But we can definitely go head a bit higher and then fall back on the range again. Like something like this would be the worst case scenario, right? Where you have a month where you start the month here, you open it up, and it heads higher, breaks above the Bollinger Band highs, lures more buyers in, and all of a sudden some shock comes in and takes it right back through the range again. That would be something that you'd have to watch out for, and that sets up when you get to the Bollinger Band highs like that. So if somehow this coming month you can lure in a bunch of buyers, you step higher, all of a sudden pulls back to the range again, creates a long shadow. This price action is happening at the margins, comes back in, these guys are stranded, and then perhaps you create the outside bar by taking out the prior month's lows. So that would be the condition, that, the worst case condition, and that would definitely be something to, that you need to pay attention to if that begins to play out. So that's your TSX. Emerging markets. So this one is the weakest of the assets that in terms of the equity markets that I'm watching, and clearly something is not playing out right in Asia, specifically China. So that EM chart is definitely one that's kind of stuck in the mud here, as I've been saying for the past maybe a couple weeks, maybe past month or so, and it kind of gave us that flavor right here back in June when you had that move higher, but it came back on the range again, right? So you had a green month, it actually went higher, and then it fell back on the range again, and ever since then it's kind of been stuck. So you're really stuck in this range here now, and you did break below the prior month's low. So that is not looking great for emerging markets. So something is happening there in Asia that is definitely squelching the growth. So emerging markets there kind of stuck now. You had a momo up, reversal short this week. So momo up, right? It was very, very minor move there, and then they faded it, took up prior week's low, back down again, tags the lower Bollinger Band, and they buy it back again just to close within the average weekly range. So I think, I wouldn't be surprised to see EM just basically continue to trade in this tight range here, because that appears to be, that we might be heading back now, just because we've got really stretched to the downside. Look, we were way, way down. Like, that's the buy condition. Anytime you see something like this, it's just worth a shot, because look how deep you are in the Bollinger Bands. Now, if it continues to break down, that would be something else. That's something where you could take a shot at it by legging in with multiple entries to try to buy that dip, because assuming the world isn't falling apart, if you buy something like this is a decent risk to reward. When you're deep in the Bollinger Bands like that, this next day here you're up 1.73%. So decent risk to reward trade there, if you want to take those types of trades. But you're doing a Bollinger Band walk to the downside, then you go really deep in the Bollinger Bands. That's quite odd, quite unusual. And then all you need to do is break above the prior bar's high, and that basically extinguishes that Bollinger Band walk, and that's what you got there on emerging markets. Let's go now to bonds, because the bonds have kind of been leading the way here, except for the one thing today, which is a bit confusing to me. So today it's a little bit different price action, which has kind of got me scratching my head a bit. So this is what I need to watch out for now, because this is a bit different than what I've been used to, what I've been watching for. But first off, let's just say that this, right? So you got the bond picture looks like this on a 3-month chart. Look, it's inside bar up. Okay, so it did break above the prior quarter's high, so that does create an inside bar up condition. You just need to stay above the prior quarter's high now. All right, so long as that stays, as long as you're trading above 146.04, that's positive for TLT. TLT's had a great month so far. We're only this is the first full trading week of the month, and we're already at 1.5%. Not bad for TLT, right? So you're now with 2 months of higher highs. Okay, on the weekly chart. Here's the issue though, TLT. I'm calling a yellow flag here now, because now you left a shooting star. You're in the Bollinger Bands now, right? So here, you had a pretty good week for TLT. You went into the Bollinger Bands now, and now this is where it gets difficult. So you left a shooting star. Now it has to keep doing the Bollinger Band walk, otherwise it'll probably fall back on the range again, and probably fill that gap, and maybe then even fill that quarterly, monthly open. Not the end of the world, but it just means that temporarily, the people may have taken it too far, and that it's going to come back in now and stop out the guys who were chasing, who are going to get caught offside. Because for the week we had a really nice move. So right on Tuesday, right, the beginning of the week, it gapped up, right? So you got to gap up, and then you squeeze anyone who got short. So look at that move, gap up, and then 3-day move to the upside, deep in the Bollinger Bands, right? So this is where you have to watch out, because you're going Bollinger Band walk to the upside, and here's your gap reversal right there on Thursday, right? So gaps up and then falls back on the range again. So here's a situation where the buyers got everything they want, but they couldn't hold it above the prior day's range. It's the gap reversal, and on Friday, boom, down 1.4% to the upside, to the downside. So the TLT trade has been very clear. It's like when bonds, the long bond, the TLT is trading up, then usually this has been very, very supportive for big tech names. So, if TLT is going up, that typically means that people are worried about growth, right? So that's why they go into bonds. They go into bonds, and usually they're looking for stock for tech names that can offer some sort of growth, which is usually why they end up floating into large tech names like the FANG names plus Microsoft. That's why the FANG names, like I talked about last week, they were all heading into all-time highs, and they got more all-time highs this past week, except for Google, who had some antitrust issues. But this Friday we had all-time highs in the Qs, but the TLT did not participate. So I don't know if it's just because it's a supply-demand dynamic, and people just got a little too extended, and then they had to get stopped out because people were chasing this move. But the Qs and the FANG names did pretty well on Friday, so that's the bit of divergence here that's not lining up. But for now, right, watching that weekly chart on the TLT, this is a shooting star on the weekly chart, as mentioned already, and it's in the Bollinger bands. So it has to do that Bollinger Band walk now, otherwise it's going to sink back in, and you risk stopping out some late traders who are late to the game. Okay, so let's talk about that 10-year, because that's really the opposite. So the US 10-year has been really trading inversely with gold. So the US 10-year, the yield, that's looking at the 10-year yield, that typically trades inversely with gold. And so here now, we may have gotten a little bit too far to the downside. So we have an inside bar, down, down, down. So 3 months of lower lows and lower highs. We did break below the last month's lows. We fell back. We're back in the range here again. We're back in to last month's lows. So that means that at the margin, buyers stepped up and pulled it back into last month's range. On the weekly chart, look at that move. You got so extended, you went below the Bollinger bands. Right, so below the Bollinger bands on the weekly chart, that's unusual, right? So it doesn't happen very often. And look, you can see it happen back here. Once you tagged that low way back in August of 2020, let me just double check that year. Yeah, it's August of 2020. It didn't look back, right? So this situation here now, we may have gone a little too far too fast on the US 10-year yield, and now maybe we bounce up and maybe work our way back up to the prior Bollinger Band high at some point. So it's still trending downward, the Bollinger Band, but at some point, if this low sticks, then expect this thing to work its way back up and then tag the upper Bollinger Band high. Just like what happened back here, right? We had that huge rundown deep in the Bollinger Bands, and then if you cannot do the Bollinger Band walk, it'll pop out and then work its way back up again at some point. So same thing here this coming week. We see now we have somewhat of a hammer. That was a big range. If we break above, right, this week's highs, yeah, you're going to go higher and maybe get tagged that upper Bollinger Band. I'm not saying it's going to happen this week, but I'm saying that would be the destination trade. So that's what I'm looking at now. Falls back into last week's range as well. So buyers definitely stepped up here to put it back in the range, and that all happened yesterday and Friday. See that big move here on Thursday? Remember, the market sold off on the same day, so the market sold off here. This is a momo down move going into the Bollinger Band lows. We watch this all the time, right? Going into Bollinger Band lows, and that black line is your 200-day. Breaks below the 200-day, and then once it clears, here's the reversal. Once you get back into the prior day's lows, that reverses that gap. So yeah, they come back in there again, and then this break above here extinguishes the Bollinger Band walk to the downside and the momo down move. And then now you have some short covering that has to happen. Would not be surprised now to see that high and get challenged. 14470 on the 10-year yield. Okay, so here's 10-year. Now the dollar also, so a little bit of a weird play going on the dollar, because it was strong on the first half of the week and then it faded. So now I think that's the dollar's going to have a hard time now for the rest of the quarter. So I think that's unless something significant happens and it can break back above last month's highs, I think we may have seen the dollar move here for the at least for the month of July, unless this week here proves me wrong and we break back above July's highs. But here now, you did break above June's highs, but now you have one of those situations where you open high and you fade back in. So that's typically very negative unless the buyers can really step up and drill it higher. So now, we're back in the prior month's range, and we're leaving already a shooting star type of pattern, okay, with a large shadow. So here, inside bar up and went up again, but as soon as this falls back on the range, right, falls back into the prior bar's range, you fall back into the middle portion of it. That's always the risk there. And now you're trading back to full time frame alignment with the downside, because you lost the monthly and the quarterly open, and it's a red week. So that's full time frame alignment now to the downside for a dollar, and you'd imagine that could possibly be that's probably good for equities. So as well as commodities. So we had this move here going into this is your Thursday. So here, this is where people got scared out, right? So here's your Monday, momo down, Tuesday, outside bar up, Wednesday, right? That's a momo up. Then Thursday they fade it, right? So they fade it, hits the average weekly range. Look how well that tags it, and then they break below, creates the momo up, reversal short, back down again. They're gunning for that low there now. Right, so the dollar slowly, it's just basically going a lot sideways. But I expect at this point now, because you're trading full time from line on the downside, that the path of least resistance is probably to the downside. Okay, so dollar has come off a bit, so that's supportive, I think, for equities. So definitely, that's probably good for equities. Now you want to wait and see. Can price this coming week break back above last month's highs? If it does that and it doesn't break below this week's lows, then those are the two levels I'd be watching to see if we see more dollar strength. Otherwise, the dollar could keep fading here, and that would be good for commodities and good for equities. Because that means people typically jump into the dollar when they get nervous about geopolitical or some when they need to play defense. So for now, DXY hanging strong, or getting weaker, not hanging strong. Okay, let's go to gold now. Speaking of that, right? So let's go to the gold chart. I use the micro gold futures contract. You can look at the GC contract or XAU USD. But for now, gold not doing a heck of a lot. So inside month so far, but outside inside. So setting up for something. You just don't know when it's going to happen. Probably, it's got a lot of work to do to break to the upside. The weekly chart, because dollar's weakening, we had a strengthening in gold, right? So here, momo up, right? So we saw this already, right? Inside bar, outside bar, and up now. So that's a inside bar reversal, and it's momentum to the upside. Okay, and so to close the day, it's an inside bar, right? So now that's a nice pattern, because this coming week we're going to get a chance to see how this thing breaks. Inside, outside, inside. There's going to be some volatility here the next couple sessions, and we're right at that 200-day moving average, right there. So we're at a really interesting level here now for MGC. The question is, does it break to the upside? And then, if you break to the upside, going into CPI, the CPI number, do they fade it to push it back in the range again? Or does it break to the downside, and then, if people get worried about inflation, and maybe does gold spike back up again, right? So that would be those two potential scenarios they're looking for gold to break out. But yet again, inside, outside, inside, and I don't think it's going to be a smooth trade going into the CPI. I think it, likely maybe it fades the move going, it fades the direction going into the number, as I talked about earlier. All right, so there's your gold contract. Let's talk about Bitcoin now. Bitcoin kind of stuck in a rut. I think all the futures, not all the futures, but all the crypto assets are pretty much in the same type of holding pattern. The question is, and again, there's a few outliers here, and I'll talk about one trade that I took, I shared last week, and that was an amazing trade. But I think most of the coins look like this inside month. And how are you going to break outside of June's range? That's the question on my mind that I think is going to be a very difficult one to play out. Is how do these coins not stay inside month, right? So something very unique would have to happen. You'd have to have some sort of real big liquidity event happen for this thing to break above the quarterly highs and then break above last month's highs of 41,273. If that happens, yeah, it's really game on again. But if more than likely we stay, based upon where we are so far, trading right in the middle there, right? So it's quite tight, and it's inside month right now. So that's the question on my mind: is how does it not stay inside month? I think the higher likelihood is we stay inside month. For now, we had a break to the downside, but we're still far from that weekly low that we got 2 weeks ago, right? So I drew this potential broadening formation that's playing out now. So that's what we're seeing now. We have a lower low, lower than that low, and now, so long as that low sticks, maybe we head back up to these highs again. It could take some time. I'm not saying it's going to happen the next week or so, especially since we know it's a monthly inside bar. But certainly if that low sticks, then ultimately this broad information can work its way out to the upside. Wait and see. And on the daily chart, we had a double inside bar here on this is your Tuesday, Wednesday. It breaks to the downside. The bars step up here again, and they basically hold it in a holding pattern. Now, if you break to the upside, that's an inside bar reversal. Back to the upside, the only issue is that you're with full time frame alignment of the downside. So here's the tricky thing here now is that you're really stuck because you got a bunch of key levels. It's a red week, a red month, a red quarter, but you got that bottom that was put in here, right? The bottom being the low here is 29,247, and I think that's probably going to stick because I think we have a bunch of folks here who are in that 30K area who are looking to buy. All right, so I think there's a bunch of orders sitting here. Now, if we break below this 29,247 area, then yeah, watch out. Don't forget that 28,540 area is the key level that I've been watching for. All right, so 28,540. It's that. Oh, sorry, it's not 20. I got to move it up a bit. Sorry, 29,247. Yeah, so we got to move it up because I didn't do it last week. But here now, if you break below 29,247, yeah, that's a significant level. If you break below that, that will go quarterly down chart, right? So that'll be reversal on the quarterly chart, and that'll be very, very significant. So that 29,247 is a very, very important level, and if you break below there, that level there, then definitely you want to be getting aggressively short because you can certainly come through this range even further. So far we've had like what, a 50% pullback on Bitcoin. If we break below that 29,247, yeah, we're going 80-90% pullback. So you can definitely expect that to happen if you can break that key level. So for now, again, watching that 29,247, but you're kind of stuck in no man's land here because you got that level right there, and it's kind of hard to get short above it because people are buying still. So even though it looks like price is sort of negative, the reality is that if you look at the chart, except for that little blip here, like this blip here, we still have some higher highs, some higher lows. So here's a low, here's a higher low, and then we had a higher low there. Then this past week we did break below that low. So you could say, well, maybe you got a lower high here going on now. But in the end, you're just stuck in this range, right? So this is actually a broad information. As you can see that I've drawn it out. You're just kind of stuck in this broad information. Now, which way do you break outside of it? Above that level or back below here again? Once you break below that level, we're coming down to here very quickly to go even further down. So that's the range that I'm looking at here. Is can you break above this yellow trend line, or you break below 29,247, you come back down through here. Okay. So Ethereum not looking much different. So we go to ETH now, USDT. Now I'm going to redraw our quarterly level. So our quarterly level here now is right there, 1711.40. All right, so that's the level on the downside that you need to watch out for. We're pretty far away. Right now we're trading at 21.28. It's a inside month. So I'm going to go on that quarterly chart real quick. Yeah, so there you go. As I mentioned in last week's video is that I have a hard time seeing how Ethereum is going to break to the upside on this. Actually, maybe that's not true. The upside break would be ideal more if you had another month of consolidation and then maybe take out the prior month's high. Because if you look at the 3-month chart, you're still going right in the Bollinger Band highs. So it is an inside quarter right now. And how does that not stay inside quarter? Look at the size of that range in Q1, right? So here's Q2 now, and you're stuck clearly inside of Q1's range. So how do you not just stay inside the prior quarter's range? That's going to be the question. Likewise, how do you not stay inside the prior month's range? Inside bar, full time from alignment of the downside. Weekly chart, you did break above the prior week's highs, but you're trading with very tight stuff here now because you're inside the ranges. We draw our ranges there. Let's see how we break this week's range. Again, that level, 1711.40, same thing as the Bitcoin. We need to see how that holds or doesn't hold. For now, we had a bit of a weak day yesterday on Thursday, down 8.82%, but on Friday here, they bought it back again. At the margin, they brought it lower, but they bought it right back again, and now they're back inside the prior day's range. As long as that low holds, maybe we see a multi-day bounce, and we got to wait and see what the new week brings. So for now, the buyers defended down there, and they brought it back in the range. So you see the same thing happening here on this is the Wednesday. So why does Thursday's action happen and fold like that? Well, look, we had a pretty nice move going into the beginning of the week here. So Monday kind of red. Tuesday repair the chart. Wednesday it actually had a good move here on Wednesday. But look, they fade it. It falls back below the 50-day moving average, back to the prior bars range, and that's the price action that's happening at the margin. So it comes back in there again, and then on Thursday, boom, breaks below the prior bars low, shooting star, reversal, and then takes out everyone basically who got long in here and put their stop anywhere in this range. Okay, so there's Ethereum. Now, here's one level to watch: the 200-day. So you're gonna see that 200-day. That will be your first, people are watching that very closely. I for one do not use the 200-day as a signal. I'm just looking at that because I know a lot of people watch it. So most people who are moving average traders, they'll use that 200-day. I don't use it for any bias or anything like that. I'm just watching to see whether it holds or not, because that tells me a lot about the other traders that are out there. But that's kind of a line in the sand, right? A lot of people are looking at that, so you want to watch for that as well and see if that holds. Otherwise, watch out, we come take out that 17, 11, 40 area. All right, now let's talk about two more final charts. Actually, let's do three. Let's go total first, the total crypto market cap. And here it is, inside month. How does it not stay inside month on that total market cap chart? On the weekly chart, it did break below prior week's lows, but it fell right back in the range again. So that's, again, a trade where you got short, you kind of got pushed, you're sitting underwater, or you got stopped out because it came right back on the range. And so now, this coming week, if you break above this past week's high, that's an inside bar reversal to the upside. That'd be on full time frame alignment, right? Everything would be green at that point. So here, what you want to watch out for is this. So if you can break above that high, that's significant. That's an inside bar reversal to the upside. You got a lot of things ahead of you, a lot of resistance ahead of you, namely the right there. That's your quarterly and monthly open. Now I'm looking for where's that chart? Where is it? Where's our 200-day moving average on that one? Just 1 second here. Okay, so it's basically hiding right behind that purple line. So that purple line is the weekly open. So the 200-day moving average is right behind that purple line, which is why we can't really see it, but it is there. So if we break above this past week's highs, that would take us above the 200-day moving average. That'd be significant. So that if we can get above that level, that'd be very significant, right? That means you break above the quarterly, monthly open. You're gonna have a green week, and you're gonna be above the 200-day. That would be something very productive for the overall crypto market total. Okay, two more charts. Let's go SHITPERP now. All right, from here, right now, inside month, just like everything else, right? How does it not stay inside month? Huge range for the month of June. Weekly chart, outside bar, but they repaired it in the sense that it came back in the range again. So it broke to the upside, but it repaired it by come back into it again. So that breakout's kind of failed. So now you need to watch out and see how does this outside bar resolve itself this coming week. Momo up, Momo down, or some sort of inside bar based situation where you break down and come back in the range again. So here, it's got a lot of work ahead of it, just like the total market cap chart. If you break above the prior week's high, you're going through a lot of stuff, right? So there's your quarterly open, monthly open, a number of moving averages. Here's your 8 period, here's your 50 and 20, but there's your 200-day. So that SHITPERP, you lost 200-day way back here, back at the 21st of June. And since then, yeah, you have a lot of work to do to get back above there again. So I think the SHITPERP chart has a lot of work to do to try to repair itself. More than likely, I think at some point the inside month dynamics are going to take hold, and it's going to be very hard to have any follow through when you have that kind of inside month. One final chart. As I mentioned last week, I said I'm looking for the cleanest charts, not the stuff where you're going to have inside month conditions where it's kind of stuck there. And, I called it out. I've been long Axie Infinity, and this week people finally got into the name. They finally figured out what was going on there. But as I said, last week, that was it was a phenomenal setup because it was very, very clean. The chance of breaking above last month's inside month was very, very likely. That's what makes the trade better. Is that the question is, how do you get outside of the range? And this is how you do it. When you can set up a trade, we have a likelihood of taking out the prior ranges, and that's when you get really, really big runners. You have those types of potential setups. So you recall, it was an inside week and down. I wanted to see if we can take out the prior week's high, and we did that, right? And there's a trade. So we broke below, and I'll just draw it in. The trade ended up running. How far did we get? I think it was a plus 34R trade. Now, of course, I did not hold it through on full size. Unfortunately, I did take some profits along the way because I don't want to get greedy. But yeah, that trade ended up being, I think, a plus 34R trade from my entry. Let's say conservatively plus 32, right? Yeah, let's say plus 31. So not a bad trade at all. Entered in there, right, and it ran plus 32, and I got out of that. I'm now flat that position out of that trade when it broke below this bar's low. So we got out of it once it broke the Bollinger Band walk. So took some profits up in here, and then took out the final bit when it broke below this bar's low. Looks like on Friday, look, they fixed it again, back on Bollinger Band highs. The question now is how far can this Bollinger Band walk go? Because it has to keep breaking above the prior bar's highs and stay above the prior bar's lows. But that being said, that we nailed that trade. Probably my best crypto trade for the month, for the past couple of months, because it's the markets have been kind of ranging. But that's what we're looking for in terms of the scenarios where you can break outside of the prior bars ranges. So very illustrative there. Last one here, I'll show you an e-gold. I talked about that one last week. I was long that one as well. I'm out of that one now because that one played out, and I managed it as I wanted to. I remember last week I said, okay, the thing about e-gold is how's it not going to stay inside month, right? So it was inside month here, right? And it's still staying inside month even after the good move it had, because the issue is that how are you going to take out the prior month's highs? It was going to be very difficult. So you manage it that way, right? So if you know that it's going to be difficult for it to clear out of the prior month's range, you're quicker to take profits. You don't get greedy. So we did the inside bar reversal on the weekly chart, and so I got in. If you recall, I think it was, was it? I can't remember my entry right now. But anyways, the way I managed it was going back, and once it gets to the Bollinger Band highs, I'm very quick to begin to think about exiting or taking profits. Average weekly range high right there, and then I'd be quick to take profits here because I know that if the inside month could take hold, and I don't want to lose my profits on a trade like that, because more than likely if you leave it alone when you're inside month, you're going to fall back in the range again. That's what happened. You go into Bollinger Band highs, inside bar, and the wipe them out on Thursday, and you fixed it on Friday. But again, you gave back a lot of gains, and for me, I'd rather be quick on the draw, take my profits when things are ranging, so that you don't give back too much profits. All right, so that's a wrap. Actually, yeah, I think I got in. Yeah, here it is, the inside bar reversal right there, kind of like the Axie Infinity trade where I used the extinguishing of that momo down reversal. All right, so there we go. So that was a decent trade, plus 5R at the near the plus 5R, and I also added on the weekly chart, so that was a good trade. Nice bread and butter setup there for me. All right, so that's a wrap for this week's video. I was a little bit rushed today to put this together, but hope you get some insights out of it. As always, if you have any questions, feel free to drop me a line in YouTube in the comment section or on the blog. And as always, if I can make these videos any better, if you want me to incorporate anything else, feel free to let me know in the comment section. Otherwise, I hope you have a great trading week. It depends on what time I get back from my vacation this coming or next weekend. That will determine whether or not I put out another week's video next week. So if you don't see a video from me next week, it's because I'm still on vacation or I got back late from my vacation. So if I don't get a video from me this coming week, then apologies. But we'll get back to our regularly scheduled program in a couple weeks, nevertheless. So other than that, have a great trading week. And as always, safe trading, and we'll talk to you soon.